New tax rules might be coming for your benefits, so here's what to watch out for. Social Security benefits were never meant to be taxed when the program launched in the 1930s. But all that changed in 1984. In that year, a law passed allowing a portion of benefits to be taxed above certain income thresholds. Those thresholds haven't been updated in decades, and now more and more seniors are paying taxes on their benefits. Let's start with what the current rules say. If you file as an individual and your income is over $25,000, or if you file jointly and your income is over $32,000, you may be required to pay federal income tax on up to 85% of your Social Security benefits. Here's how it breaks down. If you earn between $25,000 and $34,000 a year as an individual, up to 50% of your benefits may be taxable. Over $34,000, up to 85% is taxable. These limits apply to what's called combined income, which includes your adjusted gross income, non-taxable interest like municipal bonds, and half of your Social Security benefits. These income brackets have never been adjusted for inflation. That means more people every year end up paying taxes on benefits simply because of inflation and modest COLAs. So what's being proposed? In recent years, several members of Congress have introduced bills to fix this problem. Some proposals include raising the income thresholds to $35,000 for individuals and $50,000 for joint filers, eliminating taxes on benefits altogether for middle and lower income seniors, and replacing the lost tax revenue by increasing payroll taxes on high income earners, especially those making over $400,000 a year. A proposal by Representative Angie Craig in 2023 suggested repealing the tax on Social Security benefits completely and making up the difference by adjusting the payroll tax cap. Senator Bernie Sanders and others have long pushed for taxing the rich more heavily to shore up Social Security funding. On the other hand, fiscal conservatives oppose removing benefit taxes unless the lost revenue is offset either by reducing benefits somewhere else or increasing taxes in other areas. That's why so many of these proposals simply just stall in Congress. Let's look at what this could mean for you. If the current thresholds were adjusted for inflation, that $25,000 individual limit would be over $73,000 in today's dollars. That means millions of seniors are paying taxes nowadays who never would have back when the law was created. Here's a simple example. If your total combined income is $40,000 and you file individually, you're well above the threshold. That means up to 85% of your Social Security benefits are added to your taxable income. If you receive $20,000 in annual benefits, about $17,000 of that could be taxable. If you're in the 12% bracket, you could be paying more than $2,000 in taxes just from your Social Security. Strategies to reduce taxes on Social Security. Roth IRA conversion. Withdrawals from Roth IRAs aren't counted as income for Social Security tax purposes. Municipal bonds. Interest is often tax-free federally, though still counted in combined income, delaying Social Security. Now, if you wait to claim your Social Security benefits, your benefit amount actually increases, and you may spend down taxable assets first. Also, consider working with a financial advisor or tax professional who specializes in retirement planning. They can help reduce your tax liability through smart asset allocation and withdrawal timing. What about state taxes? Most states do not tax Social Security, but 11 states do in some form, such as Colorado, Montana, and Utah. However, many of them offer exemptions or thresholds. Always check with your state's Department of Revenue. So what's the future hold? If current proposals gain traction, we could see the following. Higher income thresholds to reduce tax burden on lower income retirees, removal of federal taxes on Social Security altogether, or payroll tax adjustments to compensate for revenue loss. So what can you do now? Estimate your combined income and know if you're above a tax threshold. Use the IRS's interactive tax assistant online, or consider adjusting your withdrawals from taxable retirement accounts. So here are some frequently asked questions we get. Do all seniors pay tax on their Social Security? No, it depends on your income. About 40% of Social Security recipients do. Are benefits taxed at 85%? No, that means up to 85% of your benefits may be included in your taxable income, but not actually taxed at 85%. Can this be changed? Yes, but it requires congressional action. And of course, it's been stalled for years. Hey, thanks for watching. If you enjoyed enjoyed this video, subscribe and hit the like button. Lastly, if you're looking for a free quote on life insurance, my company, The Dig Agency, is happy to help. We help Americans in all 50 states plus DC with their questions and needs for quotes for life insurance coverage. Please give us a call at 888-240-5633 or look in the description box below for the number or a link to a quote request online. You can get a free quote there without giving us a call. Thank you so much.